Hello everybody again, this is Matador from freetradingvideos.com. It's about 12:15, still Friday, October 2nd, 2009, and we're looking at the S&P after a nice gap down, sell off on some 8:30 economic news, even a test of 102 like we talked about, came back up, made a little higher swing low right through here, and if I can just drop this in, you can see that area very, very clearly. So right through here on a little 3-minute chart of the ETF SPY, we did a complete gap fill. And I'll show you where this is when I scrunch this up. This would be the open. If I remove that data just really quickly, like so, I can now go through here like so, and there it is. So this gap fill and a sell-off is not at all rare. We did get a higher swing low, and now we're consolidating, making just a series of lower swing highs and then one higher swing low. So basically a consolidation in that range right between 103 and 102.50, another well-defined number from this morning. So 102, like we talked about, there you go, and nice to have that hold up as support on some profit taking of the shorts. This line in here that we had again drawn in is important because this gap up caused a lot of people on the short side to be hurt, and they're looking for some money back. So a nice support area through this. Resistance, we're still obviously in a bit of a sell-off situation here, but at least we're coming back into the range of what is a little more normal. So taking a look at the trend from outer space back down into the 1.5, which is a little bit more normal, and now we're even at the 1.0 area. So again, if you remember, a good range from 0.8 to 1.2 is typically a neutral area, and now we're right at 1.0. The trend Q, again from outer space, coming back into the realm of what's reasonable, even at 0.7. 0.7 is just slightly more bullish than bearish, which is pretty incredible in this environment. But you can at least see that there's not just this abject fear and volume flowing into the downside. The VIX should also be corroborating that, and it sort of is, but it's also having trouble. It's almost looking exactly the opposite of the market, which is perfect. So after a big gap down in the market, gap up in the VIX, we had a rally to do more than 100% retracement of the gap, and now we're sort of hugging this line at the 100 MA. And the S&P, again, we're putting that right through here with the 50 MA. So again, just a little 3-minute chart, but it doesn't matter what time frame you're looking at, as long as you get some different perspective in here. So I like that. That's where we are right now. Not a lot to speak to, except that we are holding up in that gap. The bank put in a similar picture, so we have that for confirmation, but just realize that just a tiny bit stronger here in this little breakout of resistance at this gap, and then boom, right to the next logical spot of resistance, which was this support. Once broken, becoming resistance, and there we are again. So watching all these things, at least we're again back in the range of what's a little bit more normal instead of outer space. So we've got that in our camp. Good stuff. Just want to point that out, and I hope you're having a great trading day, and I guess I'll talk to you on Monday. D7 will be with you at the close, and a nice week, everybody. Great working with you.